Okay, here we go. So today we're going to talk about balance sheets and how to complete a balance sheet. And again, a balance sheet is one of the two main financial statements for businesses. The balance sheet goes back to day one, where we talk about ALO, assets equal liabilities and owner's equity. So we're kind of doing a full circle now and going back to that. A balance sheet is a snapshot of a business where a company is financially. It is a one-day snapshot. It can change every day because your cash changes, your assets changes, your liabilities change. So it is a snapshot. It's a one-day thing. So when we look here, this is again a snippet of our worksheet, our scrap paper that we were working on earlier. This is just a snippet of it where it has the balance sheet part and the different account titles that we're going to need to include. You can see here by this deleted line right here, this is the categories. You can see we went from 10 to 20. We're missing the income statement categories because we don't need them right now because we already did that. So let's start with our balance sheet. So if we go down here, this is our working together 7.2. So you can follow along with that if you want. It looks like, again, a full report. We have our three lines at the top that show the heading. We have, if you were to look at this, this is sort of like our ALO, assets equals liabilities plus owner's equity. So it's kind of separated into two sides. So let's kind of look at this and do this. So again, we are doing the balance sheet for all pro painters. So our heading will be all pro painters. And then the name of the title of the financial report is the balance sheet. So we'll put that there. And then the last one is the date. And again, since it's not the income statement, which is for the whole month, this is just a one day, we're just going to put April, I think it was 30th, they told us, 2020. So it's a one day thing. So that's why there's no for the month. There's nothing before April. So since the balance sheet is our ALO, our assets plus equals liabilities and owner's equity, those are our three main sections. Again, if we wanted to look at our chart of accounts, they would be our 100 accounts, 200 accounts, and 300 accounts. So what we do is we center our three section headings. So on the left side is our assets, just like the equation. So we center it and we say assets. On the right side, our first one is liabilities. We'll get to owner's equity in a minute. So they're centered because they're the three section headings, or they're two of the three. So then we take our assets. These are our assets right here, right? So we're going to write them, and again, they're in order of liquidity, how fast you can turn them into cash. So we're just going to transfer those account titles and their balances over to our balance sheet. So, and I'm going to left align each of these. So I'll make this a different color just to kind of stand out a little bit. So cash, left align. Cash, we have $4,750. And again, I'm getting that right from up here. I'm not making this up. Our next one is petty cash. And that is $75. And that petty cash is just the cash that you might have on hand in a drawer to go get some quick things, like if you need to go get stamps or you need to get a soda or something like that. That's petty cash. We have two people that owe us money. We have accounts receivable G. Mackerman and they owe us $825. We have our Woo, who owes us $750. Oops. Not who, woo, sorry. Oops. Macker and Woo. They owe us $715. We have supplies, which is $110. And we have prepaid insurance, which is $320. Okay. So I've put all of those up to here. Perfect. I'm not going to put anything else right now because I want to wait and see. So now let's go do our liabilities. We have two liabilities. We have two people we owe. We have accounts payable, Belmont Supplies. We owe them $275. Notice my columns here that I'm working on. It's not a debit and credit. They're just an adding column. Okay, so there is no debit and credit here. We know that this $275 is credit because it's an accounts payable. But on the balance sheet, we don't really worry about that part right now. Okay, now we have Lurgent Paints that we owe. And we owe them $490. Now, on the liabilities, because we still have the section heading of owner's equity to put in, our last one, right? Because we know that A equals L plus OE. So we've done these two, okay, kind of. So now we need to do owner's equity, but I can't do owner's equity until I total my accounts payable. Total my liabilities. So I'm actually going to write here total liabilities. I'm going to put a line underneath because I'm doing a math equation. And if I add these two together, so total liabilities is $765. Perfect. Now I can say I'm done that one. Now I'm going to go back to what's my third section, owner's equity. So I'm going to center this because it's my third section heading, owner's equity. Okay. Now owner's equity, let's change this back here. Owner's equity. Who is my owner? Sundin, Dwight Sundin. So we're going to put D Sundin capital. Now here it's kind of interesting because we have a couple of things we haven't dealt with. We've dealt with those and we've dealt with this. We have not dealt with this yet. We have not dealt with the capital, the drawing, how much the owner had in equity, how much they withdrew, and how much they made that month, the net income. So what we have to do is and I'm going to do this kind of at the bottom here, we have to do a little equation before we can fill in this number right here, because we can't just copy it and say it's 3,500 because it's not. It's 3,500. So let's do beginning capital is 3,500. But then we withdrew our drawing. We took money out during the month. We took out $1,200. So now I need to subtract that $1,200. So if I do that, I get $2,300 is the capital. But we're still not done because that's what they started with. They withdrew money, but they also that month made a net income. And since we're a small business and we're a sole owner, all of our net income goes to the owner. So now we're going to add our net income. And our net income again was $3,730. So we're going to plus $3,730. So if we do that, now my ending capital is $6,030. That's what goes up here now. So this is 6,030. Okay. Now down here, if I look at this equation down here, we always start with our beginning capital. We take away our drawing because the owner took that money out. And then we added our net income. If you had a net loss, if you lost money, you would subtract my loss from the capital because it has to come out from somewhere. So it's less that the owner can have out at the end of the day, right? If they were to close business, the owner wouldn't get that amount of money because they lost money. So you have to account for that. Okay, so we're up here. We've got our new capital number on here. Now, I want to total things, but here's the thing with accountants. We want our totals on the same line, okay? We don't want it too confusing. So that's why I kind of waited to do the total of the assets, because you can see here I have this blank space right here. I'm not going to put anything right there, okay? So I'm going to come over here and I'm going to total my assets. And then here, what I'm doing, because I have my total here and I have my capital here, we only have one owner's equity, right? It's the capital. So down here, what I'm going to do is I'm going to total liabilities and owner's equity. Okay, so I'm going to do both, and I'm going to put the line right there so that my totals are on the same line. So when I total my assets, I get $67.95. Total my liabilities, again, I get $67.95. Okay. They need to equal, my assets must equal my liabilities and owner's equity. We knew that from day one. So if they don't equal, you need to go back and find out why. Okay? The only owner's equity account, again, should be your capital account. Do not put drawing under there. Again, you have to relook at the equation here and recalculate my capital. Okay, because we've just ended our worksheet, right? We figured all this out and we figured out our net income. So now that needs to be reflective in here. And that's it. So here is a balance sheet. You can see from the balance sheet, it tells us how much cash we have, tells us how much the owner has, who we owe, okay? Very different than the income statement that we did last week. Again, the income statement just says, what's our revenue and expenses? This actually tells me how much money I have invested and in my business if I were to close it up. Very different, okay? It adds my net income or loss in the capital, so it reflects all of that. But the balance sheet is really the true meat of, is a company making it or not? Okay, do they have money? Now, the income statement is great because it tells you month to month if they're doing well, but the balance sheet really tells you the financial wealth of the company and how much the owners have and their total assets and so forth. Okay, and that would be it for our balance sheet. Have a great day.